Back here tonight, the so-called millionaire's tax has been a source of debate in the Bay State since it was legalized via ballot question in 2022.
22 News State House reporter Olivia Ray has a look at a new bill that could expand state revenue from this tax.
There's a new proposal to raise state taxes on megacorporations, built off of a federal tax formula dubbed GILTI, and it's gaining traction in the House and Senate. GILTI stands for Global Intangible Low-Taxed Income, and a Springfield representative's bill looks to raise the tax on large corporations' excess foreign profits from 5% to 50%. One senator claimed in a Friday hearing that major corporations move money to offshore accounts to avoid paying their fair share in taxes, leaving others to pick up the slack.
Small local businesses like the ones in your communities who cannot afford offshore subsidiaries or teams of tax lawyers end up paying taxes on the real income.
The bill is backed by the influential Raise Up coalition, and they say the higher tax would bring an extra $400 million in tax revenue to Massachusetts every year. The Massachusetts Taxpayers Foundation opposes the tax, however. They say federal policy recently shifted, making GILTI obsolete, and the state needs to understand these changes before making changes of their own.
Making a change now based on taxes that were put in place in 2017 that have just been fundamentally changed without actually taking into account what those changes are, we don't think is a worthwhile way to move forward.
Lawmakers have until early December to decide whether to move forward with GILTI tax rate legislation or to rethink their approach. If passed, Massachusetts would join 4 other New England states in taxing GILTI at 50%. Working for you from the State House in Boston, I'm Olivia Ray, 22 News.